to where things can actually head. Like my mother asked me, Tim, like, what is this blockchain about? And I sort of said to her, Mum, this can make things better. This can actually help with democratizing finance and helping with making things fairer in society. You and I understand, we can see that we're moving from an internet of information to an internet of value.
It took me 3 years to get my mother to work with Skype. Oh, far out. So I can't even imagine. Welcome to Down the Rabbit Hole, your easy to understand podcast on the blockchain and beyond. My name is Tim Lee, and thank you so much for joining me in this journey into the ever-evolving and sometimes elusive world of the blockchain. In today's episode, I will be talking with Heath Bencke, a seasoned institutional investor who has seen both the institutional side of investment, but has also been involved in the crazy ride of the cryptocurrency markets. We talk about how the institutional investors have looked at the market both now and in the future, and how they will adapt to upcoming changes. Will institutional investment appetite increase as security tokens become more prevalent? Let's find out as we head down the rabbit hole. Nothing in the Down the Rabbit Hole podcast should be considered as investment or legal advice. The blockchain and cryptocurrency markets globally are unregulated, high risk, and constantly changing. You're advised to seek professional guidance before contemplating any opportunities within the blockchain and cryptocurrency space. Today, I'm really pleased to have with us on Down the Rabbit Hole Heath Bencke, who I've known around the traps for just over a year now, I guess. About a bit over a year. And Heath is my go-to person for what institutions are thinking, because he's that really boring sort of person that's he's not. No, he's a good guy. He's a good guy. But I've sort of met him at cryptocurrency events, and it was rare to see institutional people there. So I'll let Heath introduce himself, but needless to say that he's launching a new global fund next year called the Photon Global Fund, and I'll let him explain what that is. But the aim of the conversation with Heath today is to really look at how the institutions are viewing the cryptocurrency markets and how and when they're probably going to be thinking about investing in the cryptocurrency space. And we'll talk a little bit about security tokens along the way. So, Heath, look, thank you so much for coming through. Really appreciate you being spending the time to come and chat to us.
Yeah, thanks, Tim, for actually having me on the podcast. Appreciate the time.
Excellent. So, do you just want to give everybody just sort of a quick thumbnail of your background? Because I know it, but I think it'll really help them understand where you're seeing the cryptocurrency market from your lens.
Yeah. I've been an institutional equity investor for 20 years in Australian equities. And for my sins as an actuary, for my educational background, when I first came to investment management, I was lumped into financial services, as they always do. You assume that you'll know a lot about financial services in general because of that background. So I've come up through that and effectively had a number of businesses over time, mostly working either as an equity holder in those businesses or as recently as a founder of the last business with Sigma Funds Management. So I suppose about 2016, I started to see that money started to get raised off the back of the blockchain. You suddenly start to realize, hang on, there's a new way of capital being raised, and capital formation started in a different way, started coming about. So we started spending a lot more time on digital markets, having a look at the potential for it. And you always saw that the computer share, the ASX and others were, talking about blockchain, talking about distributed ledger implementations. So I started spending a fair bit of time looking at the markets and realizing there's more likely there's going to be changes in financial services infrastructure going forward. That started to become very apparent. Now, the other thing that's for Australian investors is a very important conversation because we are very overweight financial services by any metric in the world. We are probably one of the most overweight markets. If you look at the ASX, for instance, the weighting is at 35% in financial services, but which is
it as high as that?
As high as that.
Wow.
It's nearly, so on the global, if you look at the global indices, it's around 12%. So it puts it in context of how overweight we are.
It's kind of crazy. I mean, and maybe this is me talking really naively, because aren't financial services just within an echo chamber of Australia? In terms of 35% of the ASX is committed to financial services. I mean, I know NAB and CBA have got some external influence, but isn't it just a bubble? in their own internal bubble?
Yeah.
Or is that just my naive interpretation?
Maybe your interpretation, Tim. I look at it. I look at it, and of that 35% in the early 20s is the bank weighting, and that's the way we're structured, much like the Canadian market.
Right.
Canadian market's very similar in terms of being very overweight financial services as well.
Right.
So there's the structural element to this too. And of course, we've had some pretty forward-thinking forefathers in politics who, of course, introduced superannuation, which was effectively, which we know has been a fantastic system.
Okay. Yeah.
So we've tended to be overweight because of those two dynamics in general, even though like the super side is not listed per se. You can see there's many flow-in impacts from that onto our financial services institutions that actually are listed in the country.
Right. Okay. So it is my naive interpretation. Then.
So
okay.
we are. So in some ways, it's a good thing that because we've been forward-thinking. We're one of the fourth largest funds management pension system, super system in the world. You put that in context with 25 million people. That's kind of that's
right.
We're punching well above our weight, which is a good thing.
Yeah.
But then also that is the structure of our banking system and the way the balance sheet is organised in Australia. We basically do all our housing lending comes through our the banks and the four major banks in particular. That's structurally how it's actually set up.
So it's interesting, isn't it? Because I guess cryptocurrency in general, I mean, obviously with Bitcoin when it first came out, was designed to disrupt financial institutions. So I guess in some ways, the actual, say, Australia and Canada are ripe for some major disruption then if we're exposed to that level of financial services. So I guess the first question I'd like to sort of just touch on is that obviously last year in 2017, there were massive returns that came through on the cryptocurrency space. Now, just for those listeners that may not be that au fait with institutional structures, I mean, what stopped them getting involved?
Yeah. So the first thing I'll say from an institutional perspective, Tim, is that the markets are just too small.
Right.
They're really tiny in the scheme of things at that point on. So you think back before Ethereum, that didn't really exist. Ethereum comes along. So Bitcoin gives you a concept of money. Ethereum gives you the concept of law. Say the combination generates this capital market.
Yeah.
Everything happens very quickly as well. So that's the other thing you see. We saw the mighty rally that actually happened through 2017. But the reality is to start with, it was too small to begin with.
Right.
The other thing, the major thing that holds into this, let's say there was a size and significance about the market where there was an investable asset class that you could start to participate as an institution, which is where it's starting to head to today, is custody is the biggest issue for institutions, for financial intermediaries to actually participate. And we see that conversation going on globally.
So when you say custody, I mean, I know in the Bitcoin space there are a number of parties that are offering custodial services now for holding tokens. Is that how you define that?
Yeah. So today, one of the key principles in financial services is the segregation of duties. And that's a very important principle. It's been with us actually for a long time. And for investment managers to actually get involved, or financial advisors, etc., to get involved in the cryptocurrency space, is that we really do need a third party to verify for the individuals putting money with you, and also for the sake of the financial institution involved, to actually say this is what you actually have. So that's the way the system actually works today, that there's always a third party agent who is actually sitting there that provides that trusted mechanism so people really know. So both for the financial industry and for the investor. So
the institutions wouldn't be particularly impressed then by what you're saying if everything's run by code, because they've got nobody to sue, I guess, or nobody to have that compliance lens through.
It's from the perspective of making sure that, and this is the biggest issue, when I'm talking to those who, in my position, who manage money for people today, where we have custody agents in place, is that, we want a custody agent, from my perspective, so that it protects the end investor and it protects me as well. So that everybody knows exactly this complete transparency on what that asset is and how that asset is being held and what's being done with it.
And presumably those custodial agents in the traditional financial markets are heavily regulated.
Heavily regulated, yeah.
Right.
Yeah.
I mean, there have been the futures markets that launched at the end of December, a couple of ETFs, exchange-traded funds that a number of institutions have been trying to get off the ground. If those had been approved by the SEC, would that have enabled institutions to get involved in the cryptocurrency space then?
Still early, and we're seeing a little bit of the involvement starting to come about. It's just that the state of, and this is one of the things that you recognise, Tim, is just that pace of innovation and how fast things change actually in the space. Is that effectively, even prior, things changed so quickly in that run up that there wasn't those mechanisms weren't in place. Then today they're starting to come about. We're starting to see a number of those conversations are starting to come about where institutions will become more comfortable of actually coming into the space. And look, basically what I'm doing also, there's mechanisms that allows me to actually access the space in a way that I can actually trust it.
It's interesting. I did a presentation back in December last year to a smaller investment bank.
Mm.
And around the table were probably about 30 fund managers. Mm. A lot of testosterone in the room, a lot of grey hairs there as well. Mm. And my aim was to sort of talk about the blockchain and what it is and what it can do. And I asked the question, what returns would you guys be satisfied with? And there was a lot of puffing up of chests, a lot of competition. And it was around that sort of 8.5%, 9%, 10%, maybe 11% that some of them were trying to get on their funds. And in my mind, I was thinking, my Bitcoin or my cryptocurrency portfolio made that last week. Now, I mean, of course, it's horses for courses.
Yeah.
But it just really surprised me how I think there were 2 people around the room who had Bitcoin. This was in December last year. Mm-hmm. And nobody really had a clue about the blockchain. And that's not... I can fully understand that it's a complex technology, but it was very much that it didn't seem to be on the radar was probably the main thing.
Yeah. The key issue is it really just hasn't been, it's small. It is a pimple on like a rhino's backside, really, right. In many ways when you look at it. And when you look at businesses that are talking about employing that are listed today, where investors, analysts would actually start to get some exposure to it, hasn't moved the dial in any meaningful way,
right,
when it comes to seeing different business models or profitability etc. coming about, although there is a growing awareness of it. So the question is and from that you see that analysts are just, they're not spending time on it. Everybody's got their day jobs, everybody's quite, of course, finding that, and particularly in the crypto space, there's a lot going on.
Yeah.
When you start looking at it, and I feel most conversations where I've talked to people who've had straddled both the equity space and the digital space, and they've done the homework on the digital space, their eyes open up to where things can actually head, and they see it. So that conversation, I think there's a lot of smart people today sitting in the equity markets, sitting in general investment markets. They just haven't had time or hadn't looked at this space because this just hasn't been big enough to worry about.
Right. So it's probably a combination of 2 things. One, the business opportunity isn't big enough, and number 2, there's not a narrative perhaps in the institutions to educate the key people that perhaps they should do about what's actually going and potential opportunities. So
yes, that's
is that
right.
the sort of the dynamic that's going on?
That's the dynamics going on. And the biggest things you see that you realise, if you look at the prior tech boom, you look back in 2000, that was actually driven by institutions.
Right.
Through markets.
Yeah.
And the way traditionally you raise money was through the traditional government structures in listed markets. This has not been driven by institutions. What's going on in digital markets, in cryptocurrency markets, has been driven by, there's a movement by people, by retail.
That's
right.
Yeah.
This global audience of early adopters who can see a new way forward. So it's kind of institutions are coming in after the fact here. And the thing about it's kind of very interesting that is a global audience, where the reality is when you look at the previous tech boom, it was really an audience that was predominantly institutional and out of the US than anything. Even Australia had a little bit of that tech boom, but it wasn't as strong as it was actually out of the US. So that was more localized in where it was actually emanating from. This time the groundswell is global and retail.
But with the tech boom, it's interesting you talk about that, because a lot of institutions came into the tech boom very late, and they lost a lot of money.
Yeah.
So are they in danger perhaps of missing part of the boat on cryptocurrencies then, do you think?
Yeah, I think if you look at the largest companies today, we're all realizing they're tech, and when you summarize it, they're data monopolies. We see that. We see this. We see the Facebooks, the Googles, etc., being these big data monopolies, and everybody's starting now to question their own data being actually you're being chased around and other things that are going on. We see that with some of the inquiries, etc., that are being launched. And when you start to realize in the blockchain space, distributed ledger technology, that data can be decentralized and moved in different ways, you realize we're going to start to have different interactions, personally and commercially. When that penny starts to drop with a lot of the institutions, they'll start to realize that the significance of what could develop out of the space.
Right.
But that time again, and we're starting to come to that, from my perspective, and again, why I'm doing with Hold and getting involved launching Photon, is that I can see that the foundations are actually being laid for this new way forward and the potential for disruption that can come with existing business models. And particularly when it comes to that conversation that we go back to Australia being so overweight financial services. And what we see here is that you and I understand, we can see that we're moving from an internet of information to an internet of value. Now, explaining that takes a lot of time and effort and learning, understanding what the consequences of that. But what it boils down is what we can start to see is a lot of the intermediaries that are being involved in that trusted transfer of value, their business models are more than likely to change as we move forward. So I think once institutions are starting to see that, because we're starting to see more and more the Fidelities and other major institutions starting to realise that where the puck is actually going.
Because Fidelity just announced they're doing custodial facilities for cryptocurrency, right?
Yeah, and they've been, even a few years ago they were talking about, their head of the company was talking about cryptocurrencies, and so that they see where it can potentially head. And this is all because we know, as you see, that data's moving out of silos into being utilised in a very different way than we're actually used to. And so what becomes an increasingly important, is again for me when I look at it, is that pace of innovation is accelerating. We can see that already. We see that with what's happened it's quite unbelievable to think businesses like Uber and Airbnb can be so large in such a short space of time. That was just unheard of. But we know why that's coming about with cloud, with applications, etc., allowing these businesses to scale. Netflix, another classic case of it, and then you kind of start to see, well, hang on, going forward, we can see data looks like it could become even more seamless in the way it actually can start to be utilized and scaled globally. That will more than what we actually have today, and it's that conversation that really interests me from a business perspective of how that's going to impact existing business models today, as well as the potential for what could actually come out of it.
Right, interesting. I mean, one of the things that's always fascinated me about Bitcoin, for example, is the reference to it being digital gold for the millennials.
Yeah.
And I remember when Brexit happened in the UK, when Donald Trump first got in 2016, the price of Bitcoin rose. It had that similar sort of essence of gold in terms of a safe harbor. Do you ever see Bitcoin actually maintaining that role in a digital economy, and will the institutions perhaps sway their view to say maybe this is a digital gold?
Yeah, I believe that if you believe, and I believe in distributed consensus persisting, which is really what the big breakthrough is with what Bitcoin actually brought, then Bitcoin will act as that reserve currency for the digital space. If that persists over time, so I do believe you'll find that we'll need a natively digital, easy to use mechanism in the space, which you can see, which everybody will reference back. And I think institutions initially their involvement in the space, they'll be looking at the current system as it stands today. And you look at the current system as it stands today, one of the biggest things that we know is that we've run this very large, unconventional monetary policy experiment, which we're about to unwind out of over the next 5 to 8 years. And that is, again, And so effectively rates have been held very low for a long period of time. Everybody, institutional land, recognise that. And that's had led to asset prices being basically supported, and in some cases probably more overvaluations occurred. But all the asset classes have benefited from that. Now, as we start to unwind monetary policy, that unconventional, usually I believe we'll get a few bumps in the road. We're already seeing markets starting to reflect a little bit of bumpiness because of what's happening, this reassessment of rates. So you can see what's happening in the US. And of course, there's a bit of China and China-US tension at the moment. But what you start to actually ask yourself, is there going to be this flight to another system that may actually end up being separate to our current system? Right. So there's this trade-off between the old system that we know versus this new system that's actually developing. So you can see why institutions are starting to have that like Mike Novogratz and others are starting to believe, and look, we believe this is being the new digital gold, a non-sovereign, trusted framework with which we can actually allocate money to outside of the current system, very much like what gold actually is kind of interesting when you look always as an analyst with gold over time. Gold's never made sense to invest in if you look at it from a pure fundamental perspective. As I say, looking at a gold stock, for instance, they always trade at 2 to 2.5 times net present value. If any analyst does the calculation, you sort of scratch your head and you go, why would you invest in it? But they're always viewed as the insurance policy against the current system. And it's quite likely that we can, and this again, my view is that we're going to see that come about with Bitcoin over time, that people that institutions, and that's where they'll actually look at it from that perspective, seeing it as a store of value evolution.
So given the institutions have a lot of cash, there's a big swathe of cash that they actually play with, and obviously they have to play with that responsibly. Because globally, assets under management, they're in the trillions, aren't they? What is it, a couple of $100 trillion or something? Yeah, something like that? At least. All right, so if you look at the risk profile that a lot of people might have in terms of their own portfolio, they might put 1%, 2%, maybe 5% in higher risk assets and maybe have a portfolio within that risk, and then have the rest in a sort of a more stable environment. So if you had 5% of 200 trillion, let's say, come into the cryptocurrency market or the security token market, which we'll touch on a little bit later, it's just going to blow the current cryptocurrency markets apart, isn't it, in terms of the amount of money that could come in if the market gets it right.
Yeah, and look, a lot of the numbers they're very large, and that's why kind of when you look at even cryptocurrency markets today, it's very small in the scheme of things. And institutions will start at the bigger end of town. They'll start with Bitcoin when they're looking at this. And again, from perspective, I can see a business case around Bitcoin being store of value, like gold. The rest of the space is developing. We know it's developing. And it will take some time to understand how the business cases are going to evolve over time. So you can start to actually calculate with more certainty what you think the risk-return trade-off is in that space. But definitely on the Bitcoin road, we see once you start getting custody solutions coming about like this and solving and just making it easier for institutions to access the space, you can definitely see that the pressure on the Bitcoin rail over time.
Right. Yeah, it's I think we're at a very interesting time, aren't we, in general terms? I think there's a lot of interest in the underlying technology. And as I've sort of said in earlier podcasts, that cryptocurrencies need blockchain, but blockchain doesn't need cryptocurrencies.
Yeah.
And so there's sort of decoupling. And it's really interesting that a lot of institutions or a lot of corporates that I speak to are sort of saying, here's blockchain, cryptocurrencies, we're not interested. It's all decentralized. We want to know who is on our network. There's that sort of narrative. And there seems to be this pulling apart. But with security tokens coming through, where they're going to be much more regulated, do you see that being a real chance for institutions to really get involved in this market?
Yeah, absolutely. So the thing that you see today, generally we've got these localized financial systems. So when you go around the world, you look at it, you think, we've got the ASX, we've got the New York Stock Exchange, we've got the London Stock Exchange, and of course, and that's how we've grown up with our systems. The potential for having a global equity market, which is easily accessible, is something that is, like a huge innovation, which is basically, when you think about what's happening with cryptocurrencies and those markets are demonstrating, hang on, there's a new way forward here. There's a new way of doing things. I see the question you keep asking yourself, or I keep asking myself, with this, seeing this innovation going on, and we know there's lots of hurdles, standards, security, bunch of different things that need to be in place over time to allow this to happen. But you ask yourself, there's a lot of businesses that are involved, like Coinbase and others, in developing this new financial system, this global financial system. And the question I keep asking is, where are they going to list? Where would you list? And why? And I would think, in terms of that promotion of the system, they would probably want to list into this new global market as opposed to listing on any one single exchange in any one country, in line with what their objective of achieving an open, more open financial system. Of course, it's the quality of the issuers that's going to drive that market. So that's the thing that's quite interesting when you see if there's the quality issuers are there, the market will start to actually attract the liquidity, etc., and you'll start to formulate this global market. And that's the thing that you see from the perspective of innovation, in that when I looked at it, I sort of realized very quickly that, it's very clear that not only even after you can think about, if ever talk about VC and being disrupted, but you see right up the chain this opportunity to create this more accessible system that everybody can actually access anywhere in the globe.
I mean, it's interesting. On the way through to the office this morning, I was just thinking about security tokens and real estate, and one of the, there are lots of use cases beginning to be seen where, for example, a large commercial project actually says, right, okay, we can identify ownership of 0.1% of this whole project. It's going to cost us, $150 million, for example. And then, by tokenizing that through the blockchain as a technology, then enables that asset to be, distributed right across the world, in terms of, through, subject to sort of formalized regulation, which is coming through, et cetera, et cetera. And that potentially just opens up the market for smaller investors to get involved in commercial property. And it just sort of hit me. That's going to hit the banks, for example, in a major way.
Yeah.
Because if all of a sudden a property manager that might be making money on, in terms of tenants and that type of thing, no longer actually has to take out an 80% mortgage or whatever it might be, or indeed they might take out a much smaller portion just to preserve some equity in there or something like that. But it means that, potentially you could just ramp up projects if you've got access to this democratic capital globally. It's almost like the Uber of capital.
Yeah.
Yeah. And if you've got the registered exchanges, in Malta is really coming to the fore in this particular side of things, where if you can actually launch your security token offering and offer fractionalized ownership, a part portion of real estate, and you can then trade those, and you've got liquidity for those tokens to be traded. it could just blow just the commercial real estate market apart.
Yeah.
And the institutions, I think would feel both threatened and probably excited by that. Those that are early adopters like you, with your, with the Photon fund, for example. You're seeing a lot of these sort of ideas already. I know through conversations we've had, but institutions have got to get excited by that.
Yeah, absolutely. And this is why you see the role that some of these institutions will play going forward will evolve as well as the technology actually evolves with that. But you see, the key thing is always there's plenty of, if you look at, it's really down to the quality of the issuers, the quality of what you're actually investing in, of course, because there are markets around the world. We even see in Australia, you've got the ASX, but then you've got small exchanges which people don't really even know about. And even on the ASX, you got 2,300 odd listed entities. Only 300 of them are really paid attention to. The rest of them are just too small, are liquid, startups. But that's actually capitalism. But there's a lot of assets, quality assets, which are tied up privately, which haven't made sense to actually do something like this, because just the cost involved of actually allowing it to actually happen. And that's what we're starting to see, that innovation, that you can lower the cost of actually that capital formation process and more automated approach in the way we actually go about doing things, which is definitely very, very exciting and allowing, as we're seeing, and this is the thing, I suppose, that again, from an institutional perspective, not only just on the security token side, but that formation of a new asset class which has come about, which is, again, in the smart contract platforms, etc., which of course couldn't have happened prior to all this innovation actually coming about.
I think you've hit a very valid point. I mean, it's the quality of the issuer, isn't it? I mean, if you've got a dog with fleas is going to be a dog with fleas, whatever the technology is.
That's exactly. Exactly.
And I think, I mean, there will be undoubtedly a lot of really poor quality projects that will, especially in the early stages, probably come to the market. Because I guess, I don't know, I mean, the way I see it is the institutions will probably just take a watching view, a holding view, see how it goes on, how the actual market goes, and then say, okay, we've got a couple of really good projects, let's put it on there.
Yeah, absolutely. And I see that's, again, it's like what we're doing with Holon and with Photon is it's a toe in the water in that direction. That you see this digital transformation underway, but we take a step in the direction to start evolving the system towards that conversation and starting that education process for a lot of people who are actually quite unaware or trying to understand how what's actually happening. And the thing I find really interesting about all this, Tim, is that it was very front and center with the internet when the internet came along. You and I, we noticed, we realized we were playing with the browsers, we're seeing all these changes going on. But when you got the plumbing being reworked, it's not as obvious how that happens for the average person. And that's probably the biggest thing that you realize.
It's interesting. I was on a panel a couple of weeks ago, and the discussion came around to the actual technology itself. And I think it was one of the other panelists sort of said, technology should either be super sexy or hidden. And I think blockchain is one of those technologies that's going to be hidden beneath the surface.
Yeah, absolutely.
And just change the rails and the plumbing and that type of thing.
And because a lot of people, like today, people don't know how the ATM systems work. They don't know how a lot of the payment rail systems actually work. They just use them.
No, absolutely.
And this is where we're heading with the same.
Absolutely.
In the
because
blockchain.
Nobody cares how the water comes out of the pipe. They just want to know the water comes out of the pipe.
Yeah.
But I think one of the biggest challenges, I think, for the mainstream adoption is that people don't understand easily what blockchain is. I mean, in terms of when the internet first came around, it was, Al Gore stood up and said it's the information superhighway. Everybody kind of got it. The media latched onto it. But I've spoken to so many people to summarize in 5 words, what is the blockchain? So I'm going to put a challenge to you as an institutional guy in plain English, in probably no more than 10 words. How would you describe the blockchain?
I describe it as a decentralized data movement, that we can take back ownership of our data. That's a very powerful thing for individuals to actually be sovereign in what we actually do. So, simply it's the evolution of a database that allows us to interact in ways that, in a far more seamless fashion, continuing the trend that we're already seeing as we digitize. And to me, from that perspective, it's one of the most exciting things for society. Like my mother asked me, Tim, what is this blockchain about? And I sort of said to her, Mum, this can make things better. This can actually help with democratizing finance and helping with making things fairer in society.
It took me 3 years to get my mother to work with Skype. Oh, far out. So I can't even imagine sort of mentioning the word blockchain to anybody that's sort of a senior. And I guess in some ways, a lot of the directors, a lot of institutions are in that sort of category where perhaps their first exposure to computers would have been in their 30s, realistically speaking. Because I guess a lot of decisions are going to be made by people that may not understand what's going on. So are they actually going to make a decision if they don't understand the risk, which means they don't understand the risk of investing?
And I think it's a really good point, Tim, because a lot of mentors in my space I respect, but they have not spent much time, they're not digitally engaged.
Yeah.
So it's hard to explain it to them, what's actually going on. However, you go, the ones who are younger than us, so the generation below us, they get it. It's very easy. They're digital natives. They understand it. And I suppose this is the thing where you see that there's a real movement by the younger ones who feel locked out of the current system and feel like, but they understand this new system. It gives them that ease of access. It feels like they can contribute. It feels like they're actually part of it. But that's that's hard to explain for some of the older generations. But that's no different than the sort of, I know in my family, I've got the older generations who, no, sorry, I won't even use internet banking. I still go into the bank branch. But for you and I, you will never go. We never want to go in the bank branch.
I haven't written the check since I've been in Australia. It's been 16 years.
That's right. Exactly. And so it's that generational thing that you see. So this is why I tell anybody, if you're understandably, it is early in some of the development, it's volatile, but to be there, I agree wholeheartedly with my Novograds. It's like just to put a toe in the water to understand where this can actually head, because there is a lot of very bright young people who are getting engaged in that, and that's one of the lead indicators on where this is going. And you've got the capital formation happening. You've got these bright young people there. That tells you something's going to happen out of this. And you need to be on your toes and even my mid-40s, I'm an older guy in this space.
I know the feeling. I know. I have to get my reading glasses, and I know I'm getting old now, but I mean, it's interesting, isn't it? Because the financial services industry, or the institutions, have got to adapt with this environment. And I mean, I guess you're one of the real sort of early adopters and pioneers in what's going on. So I mean, with the Photon Global Fund, I mean, I know that's launching early next year. I mean, tell us more about that, because I know you're dealing with this whole digital transformation sort of landscape, if you like.
So the thing that we're seeing very clearly is, as we digitize and we take a global digitalization mindset, we're seeing these businesses scale far beyond what we could comprehend. So we've already seen this as, we touched on Airbnb and Uber as great examples of that. But even in Australia, we have a company on our exchange called Xero, which is a cloud SME accounting provider that's going through, a similar transformation. And I've watched that transformation, the whole evolution of SME accounting for the last 20 years, being involved in it right back in the MOB days with people like Craig Winkler, who always said to me, he said, Heath, when this goes into the cloud, things are really going to change. And while Craig didn't get the opportunity to deliver on that, he did back Rod Jury out of New Zealand, who saw the change coming about. And Rod's now created a business that has amazing vision to realise that he needed a global platform on which to deliver on where things were going. So he raised a lot of money, went public from very early, raised a lot of money to do so. And now Xero today has 1.4 million customers, but it's still really a startup on the global stage where you got the potential down there at 400 million customers. That's the opportunity set. So what's happening for institutions is it's hard to comprehend the sheer scale, the opportunity, that movement for what I call as going from local linear to global and exponential, that a business like Xero could compound for the next 10 years at very high rates. And those growth rates could even accelerate as it continues to grow its global platform. And we're seeing more and more this happening. We're seeing it in the likes of Netflix and Amazon, where the sheer scale is being underestimated. It's hard to comprehend. Netflix has 140 million customers, but it's quite likely they're going to have 1 billion. That is just on a different scale that we're operating now. For most investment managers, it's quite hard to actually, their typical investment metrics that they work on limit them in terms of actually looking at a lot of these opportunities. But it's clear these digitalization trends that are actually coming. So from that perspective, Photon's capitalizing on that global digitalization thesis. And we think a lot of it also the subscription-based models that are coming about. We're also seeing lights of the Visas and the MasterCards who are really benefiting from the movement to a cashless society. We see that coming, that trend's very well entrenched globally. Will continue to go on for some time.
So you're creating a fund to really capitalize on those core trends.
And I only see those areas getting bigger. There's a lot of businesses like Airbnb Uber that we haven't even listed yet. And then there's going to be a lot of businesses with that global mindset coming to market, and even in the digital space, because you only have to spend a little bit of time in the blockchain, the cryptocurrency space to realize everybody thinks global. It's not. There's no conversation.
It's
about
global teams. It's global fundraising. It's everything's global.
That's right.
And those who think locally, because it used to be. I always remember when I was trying to raise money during the .com era, it was very much you think local. Sorry, you think global, but you act locally.
Yeah,
was the mandate that Everett was saying. But now it's very much you think globally and you try and act globally.
Yeah.
And it presents challenges and dynamics.
Yeah.
Oh, we could talk for hours on this sort of stuff. But okay, so as a final shot, then, where do you see the institutions being in this space over the next 3 to 5 years? What do you see their role being?
So I think that we start to see the custody solutions come about. They'll start to then get involved in the big end of town in the space, so they'll put a toe in the water in that regard, the Bitcoins, the Ethereums, etc. Particularly as they start to do the homework, understand particularly how on the smart contracting platforms, how the business use cases are going to firm up, because very early we've got to start seeing user adoption and see how that actually plays out. But the other area that's really key, and of course, what we're looking to solve is access for Photon, is to the new security token markets that are coming. And that's a very exciting opportunity that we can see, as we touched on. There's a lot of things coming down that will eventuate, obviously, coming down the pipeline there, that will be, from an investment perspective, of course, it'll be back to the old days of, investing in typical discounted cash flows, but that's fine. Exactly. But there'll be great opportunities that will be presented within that.
And do you think Photon will do a security token offering?
No. I think actually the Photon fund is going to be a traditional fund in that regard. What we're doing with one of our other businesses with Orbit, which is really a wealth platform that's going to help solve accessibility for Photon to some of these areas. Orbit could eventually be listed as a security token.
Oh, well,
that's the one that
we'll watch this space then. Look, hey, thank you. I really appreciate you coming in.
Thanks,
there's been some great insights from the institutional space, because people don't talk about the institutional space. It's generally sort of this cloud of just big buildings and boards of directors that have got 60 people around a table. Right. And it's just good to get that feel for it, So really appreciate it. Awesome.
Appreciate being on.
Thanks, Heath.
Right.
Appreciate your time. Thanks.
Bye.
So there you have it. The institutions have not been taking the cryptocurrency markets that seriously, primarily because the market opportunity is not big enough to hit their radar. The forward-thinking players, however, are now looking at how this technology could be transformatory for so many areas of global business. Security tokens give them the opportunity to capitalize on and in many cases participate in the new markets. In the next episode of Down the Rabbit Hole, we will be looking at banking the unbanked. In the West, we so often talk about this major global problem holistically and theoretically. We will be talking with someone who sees this at first hand. We will be talking with James Preston, who runs the South African Crypto podcast, about the realities of trying to bank the unbanked. Is banking the unbanked just a pipe dream for blockchain technology? Find out more in the next episode as we continue on our journey down the rabbit hole.